Hey everyone, Fisker reported fourth quarter and full year 2023 results that sent the stock price crashing more than 40% after the results. So in this video, I'll review Fisker's latest earnings release and I'll update my recommendation for Fisker stock. Remember, coming into this quarter, I told investors not to buy Fisker stock for a while now. And in this latest quarterly results, we get more details on the company's struggles, but with the 40% discount, is now finally the time to buy it? Well, I'll update my recommendation after I review these earnings results. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things Fisker has been doing is switching to a dealer partner model. They tried the direct to consumer model. It didn't work. They couldn't get the cars from where they produced them to the customers effectively enough, and so they had to change the model, the whole business model, to now going to a dealer partner model. So it's gaining momentum, the company says, although they've only signed 13 dealers, only 13. They highlight that there's expressions of interest, but that's not meaningful. What matters is getting dealers on board, and they've only got 13 dealers on board. Production was 4,789 units in the fourth quarter of 2023, and vehicles delivered were 3,818. For the full year in 2023, they produced 10,193 Fisker Oceans and 4,929 were delivered. So less than half were delivered. They still have a lot of these in inventory, and that's costing the company a lot of capital that they could be using, because capital is important for Fisker. For the fourth quarter, total revenue of $200 million was an increase from $128 million from the previous quarter. Remember, they've only started selling cars for 2 quarters, and they've already experienced significant trouble as they've begun selling these vehicles. So the results have been much worse than Fisker was expecting. The cash on the balance sheet was $395 million as of December 31st, but they have roughly $530 million in inventory. If they can sell these cars and turn it into cash, that'll be a much needed injection of capital. Moving on, the CEO says that 2023 was a challenging year for Fisker, including delays with suppliers and other issues that prevented us from delivering the Ocean SUV as quickly as we had expected. We also encountered unexpected headwinds in our efforts to establish a direct-to-consumer sales model in both North America and Europe at the same time. So they just couldn't execute on their business model. They thought they were going to be able to sell these cars and deliver them, and I don't know what they were doing this entire time, but they didn't lay the groundwork necessary to start delivering these vehicles once they started producing them. Maybe they were so intent on just getting production underway that they neglected to consider the logistics of the business, the other parts of the business, how they're actually going to get these cars to customers, what was delivery going to look like, how much was it going to cost them, where were they going to go, all of that stuff, where were the cars going to be stored, what real estate did they need. They didn't work on enough of those things to prepare themselves for this moment, and now they're in significant trouble. So much so that the company is raising concerns about its ability to remain a business. They're saying they might not be around for the rest of the year, that they might go out of business. So here's that statement. They're raising substantial doubt about Fisker's ability to continue as a going concern. Substantial doubt to continue as a going concern. And I've been talking about this with Fisker and other EV companies as well. They're losing so much money on the bottom line, and we're going to see just how much Fisker lost on the bottom line in just a little bit. But they're losing so much money on the bottom line with little hope that's going to end anytime soon. They are years and years away from profitability, and their hope is that investors keep giving them money. At some point, investors are going to grow tired of giving these EV companies money to burn. At some point, they're going to say, where is the results? When are you going to be profitable? And that doesn't seem like it's going to be anytime soon. And with the growing skepticism around EVs and compared to ICE vehicles, demand is not as strong as they thought it was going to be. And that's been a huge negative for companies like Fisker. Now, Fisker's saying that they plan to produce 20,000 to 22,000 vehicles in 2024 or sell that many. I highly doubt that. I wouldn't be surprised if that number is decreased from where it is now over the next months and quarters. I don't think they're going to be able to sell that many. I would be pleasantly surprised if they were. But given the demand environment for EVs, given the rising competition, given the increasing supply, given all the price wars, I don't think they're going to be able to do that. I don't think they're going to be able to sell that many in 2024. So for the 12 months that ended December 31st, 2023, the company generated $272 million in revenue, and it lost $761.9 million on the bottom line. It lost roughly 3 times as much money as it generated in revenue. It lost on the bottom line. It's losing triple the amount of money that it's generating in revenue. And this is supposedly an asset-light business model. They are not manufacturing in-house. They're outsourcing manufacturing. And they still lost $750 million in 2023. And that was up from $547 million in losses in the prior year. So $1.3 billion the company has burned through of investor money just in the last 2 years alone, with more to come in 2024. You can understand why I'd been telling investors to avoid this stock. But investors kept hope up alive that Fisker was going to increase production. They were going to sell every single car they produced, and people were going to love their EVs. They were going to buy them. Fisker was going to introduce new models, and everything was going to go better than expected, which is not the case with EVs. EV industry sales have been much worse than expected. The growth rate is slowing significantly. Supply chain shortages are easing for internal combustion engine vehicles, and that's hurting EV sales. Now that people have choices to buy regular internal combustion engine vehicles, they're looking at the comparison, and EVs just don't make sense at their current price point with the current charging infrastructure. It just doesn't make sense. They're more expensive and less convenient. It just doesn't make sense for the majority of people, and that's why more than 9 out of 10 people are choosing internal combustion engine vehicles. So to wrap up the video, I still don't think Fisker stock is a buy. I don't think this dip is a buying opportunity. I think Fisker's in a lot of trouble, and these results were worse than expected, and I did not expect to see the going concern update so soon. Just 2 quarters after the company started production, they're already talking about maybe they're not going to be in business anymore. So really concerning. I would not want to own Fisker stock right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.